When should you start your search if you're buying your first home? Well, I've got the answer for you. It somewhat depends a little bit on the market, but the easiest answer is at least 90 days. Absolutely bare minimum, you need 90 days. And I'm going to explain more here. My name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. And today we're going to dive in buying that first home. When should you be searching? And to be honest, maybe you're looking for that next home. There is a little added element if you're selling, but when should you start that process? So the easiest way to start is 90 days. That's the answer. You need at least 90 days in most markets to be able to be ready to be a homeowner and when you start that search. Let me break that down for you. First, you need 30 days for, let's say, a closing, right? They can go faster, they can go a little slower, but let's give you 30 days for a closing. Let's give you 30 days now for the actual search. Some would say that's a pretty small amount of time. I'd love to hear your comments below. How long were you looking at homes before you potentially purchased? I'd love to hear your comment below. And if you're a first-time home buyer, how far along are you? Put those comments below. While you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified. Putting out weekly videos on the channel. All right, so we've got the bare minimum, and that's that 90 days. So we've got the 30 and 30. Now, what is that other 30 days for? And that's pretty easy. You've got to get your financial ducks in a row. And the reason why I say 30 days is if there's a surprise on your credit report. I had somebody that got a tollway, went into collection. It was like a $7 toll that ended up going up and up and up, and it was like $112 and it went to collection. It had no clue, right? So it took a few weeks to get that solidified. Now, in today's world, most people are paying attention to those credit apps, but again, give yourself 30 days for money movement, for getting pre-approved, for figuring out those financial pieces. So therefore, you have some time. You're not in a huge hurry. Now, again, that's that bare minimum. My suggestion or recommendation would be 5 to 6 months. So if you want to be in a home by X date, then you want to backtrack and reverse engineer that to be 5 to 6 months. That is a key part. So step one in this search is absolutely positively get pre-approved, know what you're actually going to be able to afford. If you don't do that, you go out and you see a home and you're like, oh my gosh, this is beautiful. And then you go talk to a lender and they tell you, yeah, you can't afford that. I'm so sorry, you can't get pre-approved for this property. Well, everything that you're going to look at is going to be compared to that open house that you walk through and it's beautiful. Of course it was. It was probably expensive, right? So get pre-approved first, understand what you can afford, what that monthly payment's going to be, and what that cash to close is going to be. That's that number one. So in that 5 to 6 month range, I also want to give you some understanding around budgeting and when is your first payment. And this is usually a surprise to most first-time home buyers. So in this case, I'm going to bring up here on the screen just a quick little calendar. Let's assume that we close on the 19th of the month. So right around the middle of the month. And as you can see, we're counting out the number of days between the 19th and the end of the month. That interest that is accruing on that loan, you're paying at closing. So the first of the next month, the big red X, guess what? You do not have a payment. I'll repeat, you do not have a payment on the first of the month after you close. That's because the lender collected that interest that would have accrued, and then you paid that at closing, so you don't have that first monthly mortgage payment. Now, if you're thinking to yourself, how does that all work? Well, the terminology that we use is per diem interest. It's the interest that accrues. But before we use that term, let's think about it. If you're renting, you pay on the first to the landlord for the opportunity to live in their home for the next 30 days. When you own a home, you're making a mortgage payment between the 1st and 15th of the month for the interest that accrued last month. So let's say it's January 2024, interest accrues for the whole month of January. I make that payment on February 1st for the month prior, right? So I'm not paying ahead of time, I'm paying for that interest that accrued from before. So if you think about it, you're kind of skipping a payment, you're kind of not, but if you get your cash to close and you're like, I feel comfortable with X dollars at closing and hopefully we can close in June, then you're not going to have a payment July 1st. So if you're renting or something like that and you want to figure out what that budget looks like, keep that in mind. Just a quick little bonus tip for you. So I'd love to hear your comments below. How long have you been looking? How long did you look? Now, if you haven't clicked that subscribe, click that bell icon to be notified. I would be forever grateful. Got like 400 plus subscribers, on my way to 1,000. Thanks so much for tuning in. Check out the other videos. Be safe, and we'll see each other again very, very soon.